Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video. It's really great of you. And if you please can remember to like and subscribe to this channel, it will all be extremely appreciated and will help me get this out to more people. So in today's video, I'm going to be talking about what happened in the markets last week, and I'm also going to be talking about the performance overall of our portfolio. And overall, it was a very good week for our portfolio. Our portfolio was up over 1.6%, and that is really good if we consider that compared to how the benchmarks did last week. And the S&P 500 was up very marginally at about 0.2%, and the Nasdaq was up about 0.6% for the week. So you can see that we clearly outperformed those major indices. So some of the major reasons why we outperformed some of those indices last week was the fact that crypto did particularly well last week. We also had some very good strong performance from some of our other stocks, such as consumer staples industry. Some of our stocks in there did very well. Some of our technology stocks also did pretty well as well. And we also did a lot of short-term trade. So I traded oil a lot last week, and this is part of my secondary strategy to try and maximize the effects of volatility overall in the markets at the moment. And it often raises really good opportunities for us to make some short-term profits. And also in times of downwards volatility, it can help as well mitigate some of those risks. So I'm very happy with the way that my portfolio is really starting to recover. Sometimes you can have this kind of momentum to the downside, and it does take a while for it to turn around. And I often try to invest in what I think are undervalued stocks and asset classes. So sometimes it takes a while for the momentum to start to swing in our favor, but when it does, it starts to do really well. So our portfolio is roughly in line now with the S&P 500 at just under 4.6%. Down for the year, but considering what happened at the beginning of the year and some of those difficulties we'd had again with the Ukraine war, with the interest rate hikes, and also really high inflation, I think it's really good going that we've managed to keep our portfolio relatively stable. And we're also outperforming the Nasdaq, which is down over 8% overall for the year. So all in all, I'm very happy with how the portfolio is faring, and I'm confident in our strategy for 2022. And I think that we are going to have a good rest of the year as things start to recover. And I think that we have selected a very good set of asset classes. We have a lot of geographical diversification, and we have a lot of different stocks in different sectors, which I think are going to do very well and are going to be good for our portfolio for the rest of 2022. So now let's move on to the global weekly market update, and we will start off with the US. And last week, the US indices, as I said, they did reasonably well, finishing just above flat. And overall, it was a generally good week for the stock market. However, there was some ups and down times. The main reason why this volatility still persists, of course, is to do with these very high inflation numbers that we have been seeing recently, as well as a lot of fears around the Ukraine-Russia invasion and some of the effects that that's having on global commodity costs. So as you know, we have seen very high oil prices, and we have also seen very high prices in cotton, in wheat, and in other commodities, which has a pressure on the household spend of the majority of consumers around the world, especially in the US. So some of the things that happened in the US last week is President Biden agreed that they were going to release more reserves from the Strategic Petroleum Reserve that the US had. At the beginning of the week, oil prices started to rally, and that was because there was a lot of optimism around the Ukraine-Russia peace talks that happened. And then kind of midweek, what we saw again was that the Russian diplomats and the Ukrainian diplomats who are involved in the negotiation team has said that they are yet to find an agreement and that they are still kind of some way off. However, those oil prices did lower towards the end of the week as President Biden said that they were going to release some of those strategic reserves. The S&P 500 actually had its best month since November in March. And although it had its best month since November, it actually was its worst quarter since the early part of 2020, when obviously we had those pandemic issues that had come to the forefront. So, but we are starting to see some recovery in markets since that kind of low that we had mid last month in March, and we are studying some good recovery signs overall. There was also some really important data last week released from the US, and one of those data was the non-farms payroll, and it showed that job gains were slightly below expectations. However, unemployment rate is near a record low at 3.9% in the US. So it still shows a very healthy job market. We also saw new job openings in February reach near an all-time high as well as seeing that the hourly wage rate in the US actually increased by 0.6% as well. So we are seeing that continued inflation in terms of the amount that people are getting paid in the US, and this is obviously going to have an effect on the bottom line and the profitability of some companies, but it does show a very vibrant job market. I also saw a really interesting piece of information last week, which says that house prices for new houses in the US has actually gone up by 25% in the last year. That means that the average price of a house in the US is about $511,000 for a new house. So this is clearly showing that the prices of houses are continuing to go up and that inflation is really starting to take a grip. So let's move on to Europe. And last week, the European indices were all up for the week. And there was a lot of discussion still around the Ukraine-Russia situation. And one of the questions that was on everybody's lips was around the supply of oil and gas to Europe. And what Vladimir Putin, the president of Russia, actually decided last week was that in the future, all oil and gas should be paid in rubles by foreign countries if they wanted to buy oil or gas from Russia. And there was a response from the EU, and specifically Germany, which said that they are not willing to pay for oil or gas in Russian rubles and that they would continue to try and pay in euros. And this is a very cunning plan by Vladimir Putin because he knows that many countries are very dependent on Russian oil and gas. However, what Germany have done is they are actually starting to put in place a contingency plan to try and kind of ration some of the oil and gas shortages that they actually have, whilst they look for new plans to bring in more oil and gas from different areas for energy. So that'll be very interesting to see how those shortages persist in the next couple of months, and it is worth keeping an eye on those. But I do not think any of the Western allies are going to back down and start to pay for oil, either oil or gas, in Russian rubles. We are seeing a very similar story in terms of inflation in the EU as well. And last week they released the inflation figures for the EU, which came in at about 7.5%, which is very close to an all-time high of inflation in Europe. And in addition to this, we also saw some inflation data specifically from Germany, which said that inflation was at a 7.3, which I think was at a 40-year high as well. And those inflation pressures are continuing to grip around the world, but are very heavily affected in Europe. The president of the European Central Bank, Christine Lagarde, also mentioned last week that she was seeing a worsening macroeconomic environment, and this was mainly caused by her, as she said, in the war between Russia and Ukraine. And she said that the longer that it expected to continue, that it would have more effect on the European economy and the European growth rate. So they are obviously very keen to get that completed as soon as possible, but obviously it's out of their power. But this could start to affect the growth rate for the European Union over the next year or so. However, on some positive news from the UK economy did actually grow by 1.3% in the last quarter of 2021. And this was compared to estimates of about 1% previously. So this does show that there is some good growth in the UK, despite some of the challenges that are occurring at the moment. So now let's talk about our good old buddy, China, also known as Zhongguo. And last week, again, sentiment was dominated around those Chinese companies listed in the US using those ADR structures. And obviously, as I've been saying in my videos over the last couple of weeks, there's been a lot of discussions between the US and also China. And the US have really been demanding that the Chinese companies listed in the US be a lot more transparent with the financial data, and that this data is audited by reputable companies. And it was agreed last week that the Chinese government would allow those Chinese companies listed in the US to be audited by those reputable auditing firms, which is really good. And we did see some bounce in some of those ADRs last week, such as Alibaba and also JD.com. So I think now the chances of a very large Chinese company listed on the US stock exchange to be delisted is now very small. However, they will be expected to follow through on those and make sure that they go through really stringent auditing requirements, just like the rest of the companies in the S&P 500 and the Nasdaq do already. We did, however, see some data released from China around the Chinese PMI, and PMI stands for the Purchasing Managers Index. And this is a really good gauge of both the manufacturing and also the services industry activity in the country. And it actually showed that it has gone into contraction. And one of the reasons why it's gone into contraction is that, one, the zero tolerance policy in China around COVID-19, and also the number of cases has really increased in China over the last couple of weeks. And we've seen about 32,000 cases recently of COVID-19 in China, which does have an effect on those services industries. Last week was also the People's Bank of China first quarterly meeting, which was held. And in that meeting, they discussed about the tough situation, both internationally and in China around the economy. And this actually raised a lot of hopes that they were going to continue and increase some of that either stimulus or credit easing in the country in order to be able to support the economy. And I think that this is a very different role to what Western countries are going through at the moment, because they're going through a lot of tightening and they want to shrink those balance sheets. Whereas in China, they are starting to do more easing activities to support the economy. So I think that this will be really good for Chinese stocks moving forward for the rest of the year. We did, however, see some data released from China around the Chinese PMI, and PMI stands for the Purchasing Managers Index. And this is a really good gauge of both the manufacturing and also the services industry activity in the country. And it actually showed that it has gone into contraction. And one of the reasons why it's gone into contraction is that, one, the zero tolerance policy in China around COVID-19, and also the number of cases has really increased in China over the last couple of weeks. And we've seen about 32,000 cases recently of COVID-19 in China, which does have an effect on those services industries. As we move on to the top 3 performing stocks of last week, and the top performing stock of last week was Wix. And Wix was up about 11.6% for last week. And we have seen a really good recovery from technology stocks, especially those high growth stock names over the last couple of weeks. So last week was a very good week overall for Wix. The second best performing stock in our portfolio last week was 𝗳𝗏𝗯, and that was up about 11.4% for last week. And 𝗳𝗏𝗯 is our hot pot chain restaurant that is in China, and they do also have international franchises around the world as well. However, we have seen a lot of pressure on the 𝗳𝗏𝗯 stock over the last couple of weeks, and that is mainly because of the increased number of COVID cases in China. However, because of that downward pressure on the stock price, it is now becoming very undervalued. And it's good that 𝗳𝗏𝗯 had a good bounce back last week, and I'm expecting it to have a strong second half of 2022 if China starts to go back to some type of normality around the COVID-19 situation. The third best performing stock for last week was Ambev. And Ambev is a newly acquired stock in our portfolio just about a month ago. And this is a Brazilian, mainly a brewer of different beers and a distributor of different beers, but also some soft drinks around South America. And Brazil has actually been the best performing market in 2022 so far, and this is a very strong company in our portfolio, and I wrote a very good analysis on this last week if you want to find out more details about this company. But that was up over 9.5% for last week. Now let's talk about crypto. And last week, it was another good week in the crypto markets. And it has been for the last few weeks, really since that announcement from the Terra Foundation that they were going to be buying up to $10 billion worth of Bitcoin in order to support the UST stablecoin. And we have continued to see more and more buys from the Terra Foundation. And the Terra Foundation are actually buying about $120 million worth of Bitcoin almost every single day until they get to that $10 billion mark in terms of the reserve. And don't get me wrong, guys, this is a lot of buying pressure. And when you have an asset like Bitcoin, which is a finite supply, and then on the other side of that, you then put a lot of buying pressure from big foundations such as the Terra Foundation, buying over $120 million worth of Bitcoin per day, we are likely to see a continual rising in that Bitcoin price. And we also saw last week, MicroStrategy had also bought about $230 million worth of Bitcoin. And they did this via a collateralized loan from Silvergate Bank, which is a crypto native bank. And this just shows now that MicroStrategies are even doubling down on the huge amount of Bitcoin that they already have in their reserves. And they are now starting to leverage some of that Bitcoin that they have in order to be able to get more of the supply. So again, more buying pressure. And that is another reason why Bitcoin was heavily up last week. And we also saw Ethereum, which was up even more last week. And Solana was probably the best performing coin in the top 10 last week. And that increased by about 24%. In addition to what I was saying about the finite supply of Bitcoin, we also need to take into consideration that a lot of the Bitcoin that are in circulation are locked in cold storage wallets and they haven't moved for a long time. So it actually 63% of Bitcoin in circulation has not been moved since the last year. And this is only about 2% away from the all-time high of the shortage of Bitcoin that are actually out there in circulation on exchanges. And obviously we are seeing a lot of those Bitcoin locked up in wallets for the long term, and it's going to take a much higher price in order for people to start to sell those Bitcoin. So again, another really positive side overall for the crypto and especially the Bitcoin market. And I'm expecting over the next couple of months for us to start to test those all-time highs again. And I'm expecting a really strong second half of 2022. Last week also marked the really exciting occasion of the 19th millionth Bitcoin to be mined. And considering Bitcoin is a finite asset and it will only ever be 21 million Bitcoin eventually in circulation, it really just shows that over the years, as the halving happens every 4 years, there's going to be less and less supply of new Bitcoin coming into the market. So it is a disinflationary asset. And this means as the supply starts to shrink, the new supply starts to shrink, and the demand goes up, we are likely to see more increases in the price of Bitcoin moving forward. Thank you very much for listening to my video today. It's always a pleasure talking to my amazing bees, copiers and community, and I really enjoy speaking with you all on a daily basis. And if you ever have any questions, please do not hesitate to reach out to me. I like to call myself the approachable investor because I feel that people can come to me at any stage. And I know that January was particularly tough for our portfolio, but we have seen some really good momentum and our portfolio is really starting to spring back. And we've had a positive February month, and we've also had a positive March month, and we started off April as well positively. So as you can see, that momentum is starting to build for our portfolio. So thanks for sticking with me in January, and I'm pretty sure that if you stay with our portfolio for the long term, that you're going to be very pleased that you do. And I think that you will reap the benefits of some of that patience that you have shown over the last couple of months. So also don't forget to join my Discord group. We have an amazing community. We're always talking about really interesting investing topics, and we're having a lot of fun as well. So please make sure you join that group if you haven't done so already, and have a great week ahead.